Good evening, all. Ira Epstein of Linn Associates with your financial market update. And this wrap-up, if you will, is for Thursday, the 9th of September, 2021, 6:20 p.m. I feel like Swiss cheese. This was not my best start to a trading month. You know, traders that say they're always right or wrong or whatever, you have losers when you have winners. And this has been a market that doesn't want to pay attention to a trend right now. The strongest signal I have as a technician is when you embed. That's when you take momentum index, lock it in. You did that in all the stock indices. It was worthless. They've all given up a tremendous amount of the value. Trades didn't work. I recognized it, and in most instances, I've told you to cut back trading by 50% if you're a subscriber of mine. That's the one thing I did right. I cut the losses down, but I want to get winners. It was a great summer, but September started off terrible. This is also a time when the S&P's normally looking to make a bottom and get a short-term run to the upside, beginning today, the 9th of September, and it lasts until about the 20th. We'll see if you get that bounce. I'm still very convinced that by year end, we're going to be at higher levels, but what kind of correction could we get in between if that seasonal trade doesn't work? On the energies, China today, what did they do? They said, you know, we're going to join the U.S. We're going to sell oil from our stockpile to keep prices under control. So that hurt that market. Metal markets, you did your damage already to the gold. It's been going on. Have we changed anything on the big picture? No. It's the short-term picture that's getting hurt. You're still well over the 18-day moving average of closes. You haven't tested it since October, November of 2020, not 2021, 2020. Got that? The market failing with this pattern right now. You had an outside day down today. Now, an idea that the market's going to be a trap for those that are getting bearish, and I'm one of these guys getting bearish now, short term, is taking out the highs of today, Thursday, at right here, 45.2950. If that's taken out, be it Friday or Monday, I have to rethink. Barring that, the market's rolling over. So what could it go to? Well, the first number isn't far. It's right here at the 18-day average. I pointed that out to you all week. If we fell back, that would be the first support, and it is. If that were to give ground, then I'm looking at the 44, let's call it 44.03 level. If you take out this high in the next two sessions, I'm going to look for 45.69.5. So it's an interesting market, but you have certainly done damage to the trade, and momentum has turned down at the same time. Now, is it in a clear-cut downtrend? Not yet. Let me explain that. When prices are over the 18-day average or under it, you look to see where they're at. When they're over it, I call the bias up. That is a filter on what the market's doing with the swing lines. So while the swing line's bearish, the market has the bias up. The two fight each other. If you close under 44.86, everything turns bearish on this chart from my analysis, and I will bring that up to you. In the NASDAQ, you haven't quite lost the embedded reading. You're knocking on the door of doing it, unfortunately. It's not pretty. Each one of these markets was so much stronger days ago. Look at the embedded reading here. Let me bring you here. Look at the power of the embedded reading there. And they have eroded quickly. I'll show you the Russell. And in that process, you've taken out a group of traders that were bullish, and the market is rolling back on you. Be careful there. That I've seen these rolls before. Remember, we used to get crashes in October. Black Mondays, all that. September's one of the worst trading months of the year. Next year, I'm going to take a vacation. I swear to you, I'm going to try to take a vacation and avoid that. Downside, you're already hitting in the Dow, the lower Bollinger Band. Look at how you've rolled. Now, this didn't have the embedded reading until back here, and once it gave it up, all this nonsense began developing. Look at the Russell. Remember, I showed you the others. Here's your fully embedded reading. If you lose it, watch out. These areas are the next target. Started yesterday, you lost it with a 78 reading. Today you went right into that 18-day average, and you can see you've turned now into an overbought market that is trendless. Yes, the 18-day average is holding, but that's all that you can say about it. In the VIX, let's see if I can get this to come up. There you go. In the VIX, the market had now has a lower low, higher high. It came back. Yesterday, we had the action. I don't know if it'll let me bring that in this way. Yeah, there we go. Where it held the 100. Now, for good measure, it checks out the 18 with it, and it spins back up. In the process, it's lost its embedded reading. If it rallies, it'll give you an idea that you've got lower markets coming in stock indices, and I'd expect the market to fight at that 200-day average and that 2003 level. In the bond market, look what you've done. This is a market that went right here from that lower Bollinger Band. You had one shot to cover. What do I teach in my enhanced Bollinger Band course? If you haven't taken it, take it. That was the cover point. And look at how the market's rallied back rather dramatically. This is not a small rally. That's a $2,000 rally. 2 full points in this market. Look at the 10-year note. This market's just stuck right here. It's not trending. You've gone from the upper band to the lower band and back to neutral. Exactly what I teach in my course. Dollar index, is it going to get a bid out of all that becomes the question. If the market can clear now 92.86, the high of Wednesday, well, that'll give the market higher lows, higher highs. You'd be talking, could you go back to the contract 93.61 major resistance point? In the eurocurrency, you're rolling over in momentum, and while the trend is up, whenever you've got that roll, you got to be very careful here. You could easily now break back to this 117.90 level. The British pound has done a heck of a job of holding. Take a look at this right here. Market making its run for the 18-day average. It already has higher lows, higher highs, but it is in overbought territory. Any number that's over 70 is overbought. So the market comes down a little more yesterday, gets away from being overbought. Now if it clears the highs of Wednesday, you can take off, and that's exactly what took place. This is the big resistance area. This is your support, but it's not a buy. It's still overbought. Very difficult trade. Bitcoin, caught between the upper and lower Bollinger Band. When traders tell me now they're going to bet the market's so strong that these algorithm numbers of those black dashed lines called Bollinger Bands won't work, I go, you don't know what you're talking about. You'll get a couple of times a year where you can push on them. I get it. And you'll stay out of them for a couple of days. I've seen 5 in a row in futures. It's rare you go beyond that. Don't get caught in that. But when you get over it 5 days in a row, it's also telling you a story. It's telling you how strong the market is. You want to use that on the pullbacks. In the Brent WTI, this just shows you. Brent is the place to be, not the WTI. The market losing tonight, it's embedded reading. So numbers under 70. You weren't that way on the close. So it's a little early to jump ship, but the market is warning you it is losing its upside momentum. To me, I don't see traders jumping in. And when you go to October, watch this. You lost your embedded reading on the close. Bye-bye. If you're bullish, I think it's time you rethink that position. Neutral's probably the right word at this point. Heating oil lost its embedded reading. It's market after market after market that had bullish readings. They're being lost with one huge exception. Nat gas. It is still a powerhouse. I think these are 14-year highs. So that market is certainly taking off to the upside. Now, I put out a lot of research during the day. If you haven't tried it, I want you to. And I want you to without a credit card or anything else. I put out my full research, which covers this. 2 written updates every single day, minimum. Then special updates if I see they're necessary during the day. It'll look like this. My commentary, often bullet points. Then the trade recommendations, just like Christmas. Green, I'm hoping the market goes up and gets you green. Red, I'm bearish. I think the market's going down. I back up each trade with a video. So you get my morning video where I cover all the charts. You see what I'm saying, why I see this as an entry point, where's my exit points, where's the objectives in the market, how do you put together the game plan? What better way to do it than with a video? Think about it. You're seeing the chart, you're seeing the reasons why, and from there you make your own decision. How does this work? Well, first of all, it works on everything. Your iPhone, tablet, your computer, everything will work right there. It's simple. And let us give it to you free. Not asking much. All you do is go to our website. Under free offers, you'll see it there. Sign up. I'm Ira Epstein. Have a good day. I'll see you tomorrow morning.